Good morning, ladies and gentlemen, and welcome to the show. Today is December 6th, 2019, a Friday. TGIF, guys. Now, listen. Welcome here. Thank you for being here. Listen, guys, I want to tell you. Modern monetary theory. Keynesianism. Keynesism. It's like print as much money as you can, keep flooding the system with money, and this is going to create wealth within the system, you know. They're going all hog for this. And the Fed is working at creating a new dollar. Now, Jim Willey talked about this. He's been talking about this forever, how they're going to create a new dollar, right? But it looks like it's going to be a digital dollar. And, of course, they want to phase out cash. One of my viewers sent a suggestion that they'll probably put a timestamp of some sort on the new digital dollars. And so they probably will actually create a physical digital dollar, but it'll probably have this timestamp on it. And just like, you know, when you go to the grocery store and say you buy yogurt, you know, it's got a stamp on it, an expiry date. Well, they do not want people saving their money, basically. Because if they go to negative interest rate policy, or ZIRP, zero interest rate policy, or NIRP, negative interest rate policies, they want to keep the velocity of money up. They want it faster and faster and faster, and this fits in with modern monetary theory. They do not want the money slowing down. People savers. They don't want you to save your money anymore. They want you to spend it as fast as you get it. And if this sounds hyperinflationary, it is. Believe me, it's very hyperinflationary. But these new digital dollars will have an expiry date. They'll be able to print as many of them as they want, flood the system with them, and use them for things like social programs. I mean, it's digital. I mean, they can send you the money over your phone, and you can use your phone for payments. Now, China's already went into a system like this. It's called WePay. Everybody in China, nobody uses cash anymore in China. What's going to happen to savers? Well, if they bring out a new dollar like this, well, I'll tell you what they'll do. They're more than likely going to give you a certain time period to exchange your present dollars for the new digital dollars. And if you don't meet that criteria, if you hang on to your old cash, say you got a big wad of bills hidden away someplace, you know, wrapped with an elastic band, you know, if you don't meet that time criteria and turn it in exchange for the new digital dollars, that money will be valueless after the time expires. They probably give you like 90 days, maybe 6 months to turn it all in. Well, see, these old dollars, with no time stamp on them or anything, acted as a store of value. Even though they were putting the inflation out there and they're inflating some of their value away, still you can hang on to these as a store of value. Well, if they keep this new system in and they get it in entirely, you won't be able to do that anymore. And your bank account, of course, all the liquidity or all the money in your bank account, you know, the way I see it, if they can move into a system like this where they can basically trap your store of value so that you can't save anymore, it's going to increase the adoption of gold, silver, and cryptocurrencies exponentially, because people are going to realize, hey, you know what? I can't have savings in dollars anymore. And people are inclined to have, a lot of people are inclined, they want to have something, they want to save something. They don't want to constantly be right on the edge of having no savings at all, nothing that they can rely upon if trouble comes in their life. I mean, if you're entirely living in the way they're pushing this new system out there, if you're entirely living that way, what if you lose your job or something? You don't have no savings. So people are always going to want to have something for a rainy day, just in case. They're going to turn to cryptocurrencies, and they're going to turn to gold and silver as that savings for a rainy day. this is going to increase the adoption. And I don't see any other direction that they can move. All the central banks are moving in this direction toward digitizing their currencies. This is a trend. China's leading the way. China's already ahead of the curve, but they're not going to fall behind these other countries. Once China goes digital, they're all going to go digital. And then they're all going to basically, the old currency is basically going to be valueless unless you turn it in. This is the way I see it coming. Anyway, listen, guys, let's get started here. Let's open up the charts right here, and let's take a look at Deutsche Bank today. You know what? Deutsche Bank, now look at this. There's a spike right here, a spike up in Deutsche Bank. Now look at the U.S. dollar index, guys. I got it here someplace. Here's my dollar index. Now, I want you to take a look at this on the chart of the dollar index. Let me focus in on it real quick. 97.64. Look at this jump in the price of the dollar index right here. Focus my chart in so you can see it, okay? Get a good look at that. You got it? That jump in price? Now take a look at Deutsche Bank. Okay? What's going on? Why is Deutsche Bank moving with the U.S. I haven't figured it out yet. Okay, guys, I just saw it this morning. I saw it a few minutes ago. I haven't figured out what's going on there. But it looks peculiar to me. Look at the dollar. Deutsche Bank. Dollar. Deutsche Bank. Something's going on. Something's going on there. Anyway, let's get into silver today, and let's take a look at the price of silver. Let me put the... You know, I'm not curious about silver and gold moving with the dollar. Get this chart the right way I want it. Sec. Okay, silver is at 1664, and it's spiking down right now. Down 30 cents right now. That doesn't surprise me because the dollar just took a spike up. But you know, the last few days, the dollar's been going down, silver and gold's been going nowhere. Now the dollar goes up, and gold and silver go down. But they didn't get any gain, you know, from the dollar losing value the last few days. They're only taking a loss from the dollar going down today. So 16.58, down 36 cents for silver. Take a look at gold. Gold's spiking downwards too. It's down $14.80. It's at $14.60. It keeps going. It's going to hit support levels. Maybe break through support levels if it keeps going like this. I don't like to see this, but, you know, right now in this climate that we're in, with them pushing the stock market and equities up and everything else, you know, they're pumping it. It's a negative climate for gold and silver. And they don't realize what's coming. What's coming is absolutely massive, but they're creating a buying opportunity, so you guys should really give them a big thank you for this buying opportunity that they're creating for you at the last minute before it's going to go in the opposite direction. I say the last minute. It's not exactly the last minute. It's probably within the last year before this explodes in value. So we're in that last year. A countdown has begun, you know. And a lot of people think we're going to make it past the election cycle. But what if we don't? I mean, that's a long ways away. What is it, next November? And we got all of next year to get through. And in this crazy financial environment that we're in, we got all of a whole year to get through before the election. Do you really think we're going to make that finish line? I tend to think no. I tend to think sometime next year, before we get to the elections, the bottom's going to drop out of the whole system. Because it's just too over-leveraged with debt. It's amazing how much debt there is out there right now. Cryptocurrencies is just going sideways. Nothing to see here, folks. $200 billion with a Bitcoin dominance of 66.8%. And she's going sideways, which is actually, you know, quite a good feat in this economic environment. Because we can see gold and silver right now is succumbing to the pressure. We're looking at a Bitcoin price of $74.11, Ethereum $147, XRP 22 cents. Bitcoin Cash $2.11. Litecoin 45.09. EOS at $2.69. Now let's move on to the Dow Jones Industrial Average. The bell of the ball. This is the bell of the ball. 231 points up today, and it's not surprising me at all with the amount of liquidity that the central banks are pumping into the system right now to support these markets. The repo operation is just one example of how they're supporting it. Quantitative easing that's not quantitative easing is another example of how they're supporting these markets right now. What if they remove their support? What if they do? They can, you know. They can. It's not written in stone that they have to continue with these operations. They could just pull them if they want. They could, it's like pulling the plug. It's like when the father comes into the room, you know, and the kids are watching TV. It's 11 o'clock, and he says, "That's it. It's your bedtime," and he walks over and yanks the cheater cord off of the television and walks into his bedroom with it. And the TV just goes off, and they ain't going to get it back on again. He's got the control. Never forget, the Fed's got the control. They control this economy now. Totally. Look at this. Crude oil. It's down 31 cents on the day. So, looks like the big up on crude oil has slowed off, and it's slowed off its pace now of moving up in price. $58.12 for sweet light crude. Let's take a look now at U.S. Treasuries. And we're seeing rise in yields today. Seems to me we've seen rise in yields a couple days in a row now. And today is fairly substantial. We're looking at all across the long end of the yield curve. We're looking at rising yields. Average is probably around 5%. 5 basis points, I mean. The average on the long end of the yield curve. So we're looking at 2.28 on the 30-year, 1.85 on the 10-year, 1.78 on the 7-year, and 1.68 on the 5-year. Rising yields a couple days in a row now. I've been talking about how the Treasury yields could rise unexpectedly and suddenly, you know, for a while now, but this is not what I expect just yet. I think that's in our future ways when we start to get the real economic troubles starting to occur. I don't think just yet, but, you know, I mean, one of the things that I have trouble calling is the bonds. I can call the rest of the markets pretty good, but I have trouble calling bonds, so trying a future prediction in bonds is not. Don't have the best track record in bonds, is what I'm trying to say. I've got an excellent track record in calling these other markets, other parts of the markets, you know. But bonds, a little bit less so. Anyway, what we're seeing here is we're seeing rising yields today. So I can state the obvious of what I see, and this is what I see as rising yields. Let's take a look now at the dollar index, and we're looking at 97.61. And it looks like the jack up in the dollar index, the hike up, is ended now. 97.61. And listen, guys, want to thank you guys out there who have donated to my channel. You know, I really appreciate that. Cryptocurrencies, really appreciate it. Even if it's a tiny little fraction of cryptocurrency, I really appreciate that. It's really nice, you know. I want to thank you guys out there. And thank you for watching my show. You guys have a great Friday. Have a great weekend. I'm going to do a show this weekend, probably Saturday or Sunday. And we're going to explore in depth the financial system. Bye-bye, guys. And you guys have a great day.